Today, I want to talk about how Judge Zurn has denied the ability for any more objections, indicating a lawsuit decision is imminent. I also want to go through the mechanics of the reverse split and explain exactly how many shares you'll receive. And finally, I want to talk about the short's last chance or their last stand. So stay tuned and let's make some money. I want to dive straight in with the key information. So, America tweeted saying Rose Izzo's attorney wants until Monday to reply to objections to her motion. But Zurn has already said the record on the proposed settlement is closed, and both counsels tell him, no, you don't get to go against the judge's letter. This letter is from the plaintiff saying we write to inform the court that, in accordance with Chancery Rule 171F, Miss Izzo intends to file a reply in support of the motion by Monday. However, the court's replied saying, Ted, the court's July 24th letter concluded that other than the advocacy requested above, the record on the proposed settlement is closed. The court's letter did not include a reply on your motion, and it's in the defendant's position that we should abide by the court's letter. And the defendants replied saying we also don't read the court's 24th of July letter as contemplating a reply, and therefore don't think it's appropriate to agree to a schedule for one without leave. So it's clear to see the court's position is the record on the proposed settlement is closed and is just simply deliberating decision. There's no more objections, there's no more motions for or against the lawsuit, it's just simply now up to the courts to decide the split date. And as Frank tweeted, he said, it looks like to me the shorts can no longer use the going bankrupt thesis anymore. And now all they have left is to resort to attacking Adam Aaron and bringing more and more lawsuits against AMC in a last-ditch attempt before the squeeze. And Frank added saying, nice try, but it won't work. Which was also very aptly timed as we've now had a third frivolous lawsuit against AMC. As Boss Bunce has tweeted, he said this time they claim AMC broke the law by sharing website browser cookie information with Facebook when buying movie tickets online. He's obviously added saying that's absolute rubbish and it shouldn't affect the APE to AMC conversion nor the reverse split. Shorts are clearly desperate. MarketWatch was posting articles on Friday saying AMC illegally shared customers' information with Facebook, a lawsuit claims. This is yet another lawsuit to try and delay the reverse split and the conversion of APE into AMC. And it seems the shorts are really getting desperate this time, claiming that AMC broke the law by sharing website cookies. Obviously, website cookies are always shared wherever you go on the web, but there is GDPR or global data protection requirements that do need to be followed. I'm sure AMC as a multi-billion-dollar business is following all of these GDPR requirements properly. So again, it seems like another frivolous lawsuit to try and deny the split or to delay the split even further. And what is also very interesting is that from Virtue's 10Q, their cost of security sold not yet purchased or FTD expenditure increased by 131%. It says interest and dividends expense increased by $118 million or 130% to $210 million. And the increase was primarily attributable to higher dividend expense with respect to securities sold not yet purchased, and as well attributable to a higher interest expense incurred on cash collateral due to increases in securities lending transactions. So it seems Virtue has been trying to borrow even more shares, trying to pay even more money to borrow those shares, and has been failing to deliver on those shares as well, incurring additional fines and interest expenses. Especially as those expenses have increased by 131%, Virtue is clearly struggling. And it seems the reason why shorts are trying to delay the split further is because both Virtue and Citadel are having very bad years so far. Also, you can currently get a guaranteed free share of Tesla, a $50 cash reward, and up to 15 free stocks, which you could always use to buy more shares of AMC, GameStop, or of APE when you sign up to Moomoo using the link in the description below. Signing up to Moomoo is free, it just requires a temporary deposit, and it's a really great way to help support me and to help support the channel. And on top of that, Moomoo is very easy to use, they've got tons of technical indicators and even has their own options trading platform. Investor Turf tweeted saying Virtue and Citadel Securities, major traders, who both experienced declines in their trading income. Virtue reported a 23% drop in trading income for the 3 months ending June compared to the previous year. Meanwhile, Citadel Securities saw a 35% decline in revenues for the first half of the year, and their profits were reportedly down by approximately 60%. So far this year, the stock market has been on an absolute tear, but yet Citadel's profits are down 60%. All Citadel had to do was buy any kind of tech stock of any varying size, whether it's a big blue chip tech stock or even a growth stock. And if they did so, they'd be up between 100% and well over 800% so far for this year. But instead of being up 100% or 200% or 800%, they're down 60% instead. Whether Citadel did invest in some blue chip tech stocks and are up 100% on those tech long positions, but have also lost 160% on some of their leveraged short positions, I don't know. But clearly whatever Citadel is doing is the wrong thing. Citadel clearly have some sketchy positions that have been losing them tons of money this year, which could continue to spiral out of control. I wonder if this profit decline will go past 60% to 80% or to 100% or maybe even more. And as a result, Robert has tweeted saying that he doesn't feel the least bit sorry for the shorts because the shorts have been warned. He also attached this very interesting screenshot of all of the options chains for AMC, which are strangely massively stacked. We can see the options chain for both August and September are absolutely stacked with both in the money and out of the money calls. Going forward to the very start of 2024, there's a total of 1.6 million call options, most of which are currently out of the money, but many are already in the money, and many will also be coming in the money after the AMC conversion and reverse split. Now, retail stocks also tweeted saying 3 times today, I've seen people ask about the reverse split mechanics again and again and again. He said settlement is after the reverse split and conversion is also after the reverse split as well. And yes, APE gets divided by 10 as well. To make this easier, I've drawn it up on the whiteboard in exactly how the AMC conversion, reverse split and settlement will happen and around about what prices all of that will happen at as well. So let's say, for example, you're currently holding 150 AMC shares and 150 APE shares. Step 1 when this lawsuit finishes is to perform the conversion, when APE converts into AMC and you will have a total of 300 AMC shares. Now on the same day, but I guess technically ever so slightly after the conversion, you have the reverse split, that 10-for-1 reverse split where your 300 AMC shares reduces to 30 shares. And then again on the same day, although technically I guess a few seconds after, you have the AMC lawsuit settlement as well. That's 7.5 shares to 1 lawsuit settlement. Dividing your 30 shares by 7.5 shares means you get an extra 4 shares. So that means your 150 AMC shares and your 150 APE shares convert into 34 shares of AMC in total after the conversion, reverse split and settlement. Now in terms of prices, AMC is currently trading at $4.80 and APE is trading at $1.83. Altogether, using this example, that's around $900 worth of shares, but obviously after the split where AMC will be trading above $30 per share, that's over $1,000 of shares you'll have at the other end. So actually your total shareholding value will increase, obviously due to these additional bonus settlement shares. And obviously, as I've discussed in previous videos, after this reverse split, AMC could very quickly and very easily run from $30 per share up past $50 and up past $100 per share as well. Obviously, at that point, with the crazy high borrowing fee, the near impossibility it is for the shorts to locate shares, the shorts will be very financially stressed. And obviously at that point of being very financially stressed, paying hundreds if not thousands of percentage points on their cost to borrow fees, they could end up being margin called very, very quickly. And obviously at that point being margin called above $100 per share could very quickly end up causing the squeeze. But finally and interestingly, Investor Turf has also tweeted once again saying JP Morgan is being sued again for an enormous $3.5 billion. It says a massive $3.5 billion lawsuit against major banks like JP Morgan and Citigroup over alleged foreign exchange rigging was revived by a London court. On behalf of thousands of asset managers, pension funds and financial institutions, this lawsuit has been reopened against JP Morgan. This is due to the recent lawsuit about JP Morgan deleting thousands and thousands of emails, which has resulted in many asset managers believing JP Morgan is once again manipulating the FX markets and potentially the financial markets as well. So it seems it's not just retail investors, but it's also thousands of pension funds and financial institutions that are also believing JP Morgan is manipulating the market. And they also believe that something needs to be done to curtail JP Morgan's abuse. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.